Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. I want you to know how much I appreciate you joining me today. Today we got a few things to cover. We're going to talk about some stocks that have relative strength. We're going to talk about Netflix earnings. We're going to go over a chart of the SPY ETF that we've been watching for a while now, for a couple of weeks. And we've been watching it actually on the hourly candlestick. Most of the viewers of our channel are shorter term traders, anywhere from day trading up to a few weeks to a month. We kind of got right down to that level yesterday where we determined that if it breaks, that's going to be a short-term pullback. But we stopped almost exactly there. And this is really, we have discussed the differences between your game plan for that day and your watch list, which also encompasses things that you need to watch going forward. So in other words, it might not have a trade for you that day, but it's a significant reference point that you need to set an alert for. So we're going to take a look at what I mean by that in the SPY. Then we're going to look at a few other ETFs and then break down some new stock picks for today. So let's head on over to the charts. We're going to kick it right off. I'll be back in 1 second. Okay, so we're going to share the screen. We're going to head right over into looking at some earnings first. Actually, we'll go over this chart of the SPY first. So if you remember, and we zoom it out on the daily chart, obviously we've been in a much longer term run. This run right here, which was getting, quite honestly, a little bit ridiculous. I hate to use the word overbought because overbought can remain overbought, which it actually did. That's really a good argument against using overbought indicators. We just said that it just needs to pause. It just needs to give us a different look. We need to have a spot where the reward potential expands a little bit more from the optimal entry. And we pulled back to a point where that was the key level. So now what I mean by that is I'm going to drop on over to the hourly chart. So this is that time frame that we're looking at. This is that 17-day run or whatever it was, 15 days. And right here on April 14th is where we broke the first time that we broke that trend. Now, that is a potential change of trend. That is what we call a line in the sand. That's the tape reading spot that we want to say, if price comes back to that, that's significant. Now, only one of two things can happen. When this trend line breaks here, then you have to draw two lines, and now you're basically stuck in that box. That's quote unquote the right price. We head up to that level, and right here is the first place that it actually broke. So one of two things can happen. It will make a new high or come back down and take this out. So as long as we don't break this level, we assume that this trend line is up. Now, this applies to any time frame. This is super easy. In our coaching call on Monday night, we actually discussed this is how I work my charts every day. Every single day, I don't use any indicators. I am getting the raw price action to notice the highs, the lows, the types of candlesticks, the levels we need to trade around. And quite honestly, I strongly suggest you do the same thing, and then go over to your moving averages and see if, or whatever other indicators you use to see if there's anything else going on. But what's interesting is we got the pullback that we looked, the 2-day pullback, like peace, 2-day pullback, and we hit that level pretty much exactly. So we're looking at right above the 410 level, maybe like 410.50. So we're kind of like drifting right there. But this is a good thing. If this support comes back and holds, and the 2 days of profit taking, the 2 days of lack of buying hold, this is the level where we will all of a sudden now find that buying again and look for new highs and take out the 418. However, this is where we really need to put on our trader hat. This is really where you need to step up and say, I really understand what I'm doing. If we find support here in this 410, 411 area, we can look for a run back up to 418. And then those stocks, specifically tech stocks, basic material stocks, all the stocks that have been strong for the last 3 or 4 weeks should catch a bid and then also have a nice 3 to 5 day rally, and we can have some nice cash flow over that window. However, as we're going to talk about Netflix in a second, if we break 410, here's two things. I keep saying two things to be paying attention to. In a bull market, when support is broken, that support usually does not stay broken for very long because you have this much bigger buying pressure on that, and the support breaks, the buyers come back in bullish stocks and find that bid again. However, if we break down and roll over, like a couple of stocks had poor earnings this week and they rolled over and kept going down, or even Boeing had a big move to the downside, then you need some other criteria to take advantage of that trade. So you look at these candles like, oh my gosh, it was a giant red candlestick yesterday. How could I have made money short selling that stock in that very short time period? Now, here's the biggest thing I want to get across to you. Just look to the left. Look to the left. So if you're a day trader, look to the left to the hourly candlestick. If you're a swing trader, look to the left to the weekly candlestick. You can take advantage of those micro time frames. So in other words, a day trade or a trade that's 2 days while the market's going up, but that stock is really weak. Look at the color of the candle to the left of you. If it's going down today, but the candle to the left of you is green, still a really tough trade because you're fighting the most recent order flow on a higher time frame. However, and we'll take a look at Boeing in a second, if it starts to push down today and the candle to the left, which would be the next higher time frame, is also that same color, then you can look for some short sales in that direction. If you don't, those are where, if the candle to the left is not the same color, and again, trading is easy, but we need to follow it. You need to stay away if that other candle is not matching the color. Now, that's if you're actively trading. If you are kind of like one of those micro traders where you're on really, really short time frames and maybe you're on the 1 minute chart, then you have a much different time frame. You could be looking at the 15-minute chart to take advantage of that. You'll trade a lot more, which is not something I like to do anymore. That's where all this gray hair came from. I don't like to micro trade anymore. But here's the lesson for the whole thing, because it kind of applies to what we're going to talk about in Netflix in a second, is that you need to understand which trend you're trading. Super, super important. Fighting the most obvious order flow is a recipe for getting separated from your capital. There's no other way to put it. However, if you decide to trade that micro time frame, you need to recognize how much buying power or selling power is backing your idea. So we're going to take a look at Boeing, and I'm going to show you exactly what I mean. It's probably easier to explain looking at the chart. So we're going to go to Boeing, and we're going to pull up the daily chart. So obviously Boeing broke down, and it's got 1, 2, 3, 4, 5 days and this bullish move to the downside. Now we actually hit really significant support here, but this is what I want to talk about. If you see Boeing going down today, and I'm just going to use yesterday as an example, Boeing opens lower, gaps lower, pushes down. You're like, okay, should I be looking to sell this stock short? And this is where you go to the next higher time frame, which could be an hourly chart. And you only decide to short sell as long as that hourly chart is red. If you're looking for a little bit longer term swing trade, then you'd look at the weekly chart and say, should I be timing short sales on my daily chart because the weekly chart is also showing bearish order flow. These are the pieces of the puzzle that are kind of fun to put together. So I'm going to say it one more time. If you are looking for shorter term trades because the bigger picture is confusing you for whatever reason, I can't stress this enough. Simplicity is everything, because that's what leads to clear decisions where you trade with conviction. Just write this down. Look to the left of the next higher time frame. Something significant. It should be at least 3 times where you're entering from. And look at the color. That's it. Just look at the color of the candlestick. Only if that is the color of the direction you plan to trade should you be placing that trade. I know what you're thinking, right? Is trading that simple? Yeah, it really is. The one thing that makes trading challenging is when we don't get volume and the direction is not clear. You got to be very, very focused on only doing it when the direction is super clear. So in other words, Boeing has been going down for 5 days, gap lower today, and then you look to the left and say, okay, everything is pointing in my direction, which takes us into Netflix now. So let's hop on over to the chart, and we'll take a look at Netflix. So Netflix top line, they actually beat on quite a bit. So first I want to draw your attention over here. It's down $41. It was actually down 10% at one point. So it's actually bounced back a little bit. It's at 507. It's all the way down here near the support. So what are we doing in Netflix? So if we're looking to swing trade the stock, we need to be going out to the higher time frames. And you can see the last 2 weeks are what we call indecision candlesticks. So we're not seeing this. We're not seeing a giant red candle. We're not seeing a giant red candle. As a matter of fact, we have 2 weeks of nothing, 2 weeks of indecision, 2 weeks of opening and closing around the same spot. So what does that mean? How does that translate into a trade for Netflix today on the gap lower? This is where active traders, this is where professional day traders take advantage of this, and now you start dropping down to the lower time frames after the gap down happens today, and you start to look at the hourly chart, and you're resetting your day trade in Netflix every single time that hourly chart is a particular color. So if you want to take advantage of this stock on both sides of the trade, should the stock gap down and trade higher, at the bottom of every hour, and I want to be clear on this, the bottom of every hour, you keep resetting. So 9:30 to 10:30, what color is that candlestick? 10:30 to 11:30, what color is that candlestick? And whatever color that candlestick is, that's the only side of this trade you should be on. Now, should you be trading both sides? Yeah, that's the point. If you are getting volume and volatility, which we absolutely will be getting in the stock today, you could have a really good day trading day. I'm not talking about swing trade. I'm not talking about longer time frame in Netflix today. This is exclusively I'm speaking about for day traders. Tesla is very similar to this, and where it's one of those stocks that should be in your watch list every day, provided you could trade something like this, provided that you have the capital to do it. So that's a day trading strategy. The simplicity of using the hourly clock to reset, for lack of a better way of putting it, and then only looking for trades in that direction. Now, the thing here is you have to be flexible. Both sides of the market could end up unfolding during the day, and that's okay as long as you are disciplined with your risk and you're disciplined with the side of the trade that you are on. So a little bit of day trading lesson there. Earnings that are coming out today are scheduled for today. We have CMG, Chipotle. I just want to give everybody a quick list. Verizon, Save, Spirit Airlines, Halliburton. Halliburton broke to the downside. It's going to be interesting how that one comes out today. Lam Research, LRCX, LVS, and Discover Financial. Discover was actually pretty strong. We're actually looking for it to finally take out these three levels here. And just as an aside, if earnings were not coming out today, this actually is one of my favorite patterns to buy, believe it or not. As a swing trader, I really, really like when stocks are strong, trading at a breakout level, pull back, close on the lows, and then the next day, which would be today, I'd be looking for support around the previous day's low for buyers. So today looks like we're going to open up a little bit lower. So just pretend we don't have earnings today. I'd be looking for today's open to be right around the previous day's low, or open flat, test the previous low, find support, and then look for a new trade, or open trade below that, snap back, and in this case, looking for a buy spot above 96. So what about some trades that we're looking at today? We have trades on both sides of the market. We have strong stocks that follow through. We have strong stocks that pull back, and we're going to take a look at both of them. So again, use the criteria that I just gave you before. Hog actually has been really good. Look at these bullish gaps in Hog, getting some serious follow through. And if you go out to the little bit longer time frames, you can see where we are. We got a little bit of resistance here, and then the next significant level is around 60. So we got some room to go there. And Hog, not a lot of volatility there, but obvious is obvious, right? IBM actually did have earnings this week and actually had a really good clean gap through above 136. Stock is looking great right now. Philip Morris, they actually had some interesting news the other day. I don't know if everybody saw this. This collapse here where there was an article about taking nicotine out of cigarettes, and the news came back storming back yesterday. And this is what's known as an engulfing candlestick, a bullish engulfing candlestick pattern that just came racing back, looking for follow through there again. And you know what's kind of fun? Let's actually go down to that time frame and just use what we just talked about. So the first hour is green, the second hour is green. So you're looking for day trades. You're looking for day trades. You stay on the sidelines. You look for day trades, maybe get taken out. Maybe you don't trade that much. And then you get another hour that's good, an indecision hour. And then the last hour, you just kind of sit on the sidelines. So very quick, good lesson there in day trading strategy. AMT is one that, if you remember, we called it out over here when we broke the trend line. This bullish pause was the one that we said that we're looking for a new swing trade. And yesterday, it actually broke out of what we call our optimal entry and has some room to go to 268. So keep that one on your watch list today as well. KMB, really good clean breakout. Now, this is a good example here. I always get this question. How early do I buy when a stock breaks out? How do I allocate my position sizing when a stock breaks out? And write down this answer. The answer is, how obvious was the order flow prior to the breakout? In this case, the order flow is not obvious. We've kind of been in one of those boxes for months now. And actually, if we could zoom back, you can see where we are. We've been stuck here since November. So I like the breakout here, but this would be a trade I'd work in at least two pieces. Johnson & Johnson actually breaking out, very similar pattern. But again, these are stocks you need to have in your watch list, maybe not necessarily today's game plan. PLD, actually really good clean after 2-day consolidation. Look at these two melted candles into a nice bullish U-turn. UNH might be a little expensive for some members, but again, a push and a pause, breaking out of the optimal entry. But here's the big thing about the stocks I'm rattling off right now. They're all showing relative strength to how the market traded yesterday. Keep that in mind. That's a big thing to scan for as well. And you'll notice that we're sticking with these healthcare type stocks. And you can see a nice 2-day pause here, rallying again. So again, let's go into MDT as a really quick day trading lesson. And you can see that clearly, green, indecision, green. So really 2 good, solid hours of day trading there. Now I'm going to hit the other side of the market. We're actually going to look at strong stocks with a weak close. So these stocks have been rallying, and now they're pulling back a little bit. So very similar to what I just showed you before about buying a stock on the way down. So you can see here, Alcoa had good earnings this week, actually recently, rallied, pulled back. So now what I'm looking for is a flat opening to test this 32, 33 area. And actually looks like it's going to open up higher. So that gives you a little bit of opening on the market today. So I'm looking for these strong stocks to pull back, looking for them to find short-term support, and then look for a new swing trade. So this is the scan that you want to write down, strong stocks with a weak close. So we're looking for them to bottom out and then resume the previous move to the upside. So Alcoa, DHI, which has been a very strong one. So again, 2 days worth of selling, looking for today to find some buyers. And last but not least, we're going to finish up with FCX, which actually you can see has failed at the $38 breakout. So this is an interesting one to set up. We would look for the first piece of the trade, finding support around 35 or above, and then we wouldn't add to the trade until we get a strong bullish close above 38. So interesting level in the SPY today. Mark that down. You need to have those line in the sand. That's how you become a better tape reader. Again, separating yourself from chart reader to tape reader. And that's the level we're watching. That 410, 411 area in the SPY. Use what I talked about here today. Whether you're day trading or swing trading, go to that next higher time frame. If that candle is green, get in there. Keep it that simple. All right. Hope you enjoyed this video today. Thank you so much for being here with me today. I actually had a sick day yesterday, my first one since 2018. So I'm back today. You can still hear my voice is a little bit scratchy. If you find these videos helpful, definitely click down and comment. I love when you get comments, and I reply as soon as I can. Give us a thumbs up if you like this video, and please be sure to subscribe as well. Have a great day, everybody.